on today's webinar, feel free to email us after and we'll respond to you directly. If you encounter any technical issues during today's webinar, please contact the GoToWebinar support team at 1-888-259-8414. Today's webinar has the benefit of offering CTP accreditation, and you'll receive those approval letters over the next several days. In addition, you'll also receive links to today's recorded webinar and slides, so don't worry about trying to write down that particular web address there. You'll receive that directly. Let's look at today's presenters. Again, today we have Jason Dobbs, who's the manager with Actualize Consulting. Jason will be sharing a bit of information with us fairly soon. And Bob Stark, Vice President of Strategy with Kyriba Corporation. Let's look at today's agenda for our webinar. So today we're going to cover the goals and objectives for our payments program. We'll look at bank payment connectivity. We'll also look at payment fraud, prevention and detection of payment fraud. And within payment factories, we'll look at integrating ERP payments, as well as international payment strategies and structures. We'll also cover technology innovation, which does include blockchain and DLT. And with that, let's get started with today's webinar, and I turn it over to you, Bob Stark. Please continue.
Great, Tracy. Thanks for the introduction and welcome, everyone. And a special introduction, or I guess thank you. I'll ask you for an introduction, Jason, but thanks for joining. I appreciate you being part of this. Why don't you, if you don't mind, just take a couple moments and introduce yourself and also introduce Actualize Consulting, just so that people know who you are and who's behind that voice.
Thank you, Bob. My name is Jason Dobbs, and Actualize Consulting is a capital markets consulting firm. We're partnered with Kyriba, and we assist on implementations in a number of different capacities. My background is in Treasury implementations. I have done a lot of advising on different ERP integrations, payment processes, liquidity structures. So I'm happy to talk today a little bit about payments in general.
Yeah, that sounds great, Jason. And obviously, you're understating the fact that you can attach payment guru to your list of bullet points as well, because I think, especially with this agenda we have today, there's some interesting topics. Now, it could be a 3, 4, 10-hour presentation on payments. I mean, it actually took us a little while to decide what do we actually want to talk about today, because payments is a very big topic and it has a lot of implications for Treasury teams. But as Tracy mentioned, what we want to do is keep it concise within the hour, in fact, leave some time for questions at the end, and go over a few things that our clients and people we work with within Treasury have identified as big pain points for them in areas that sometimes can be a bit confusing or overwhelming, but also where there's big opportunities for improvement. So with that, Jason, I know this is a part that's very important for you, is goals and objectives and kind of setting the landscape at the start rather than just launching right into topic after topic. So this slide seems especially important for that.
Yes. What I tend to do with my clients is the very first thing is I'd like to lay out objectives. What's your goal? What problems are you looking to solve? When you have a focus, that a roadmap, where someplace that you want your Treasury to be in 1 year, in 5 years, that's when you can really start to make headway in what types of improvements you should be tackling now, and how you can best prepare yourself to tackle the ones that are going to be coming later on. So we put together a couple of sample goals. These are some goals that are pertinent to the topics that we're discussing now. So you may be very interested in these topics if any of these goals, such as improving efficiency via a payment factory. If obviously implementing a payment factory is something desirable, it's going to be one of your goals. But what does that actually achieve in terms of efficiency for your company? Is it a good fit? Also decreasing costs by implementing certain payment solutions. Or another really good one is being able to increase visibility within your liquidity positions by implementing a payment factory. So any of those are amongst your goals, then this definitely is something pertinent to you. But goals at large are something very important as you're starting to determine what sort of strategies you're going to be looking at and what sort of solutions you should be very interested in.
Yeah, I think those are really good points. Also, kind of a nice segue into one of the important goals for many organizations, which is automation of connectivity. There's so many organizations that run into issues in terms of what's my connectivity strategy, how am I supposed to connect, do I connect via SWIFT, do I connect via direct processing, do I have maybe ERP and the Treasury connect separately? There's a lot of questions that typically need to be answered there, and I think that fits nicely within setting your goals. What do you want to get out of it? Do you want automation? Do you want standardization? That plays nicely into this topic of bank connectivity. So as you can see on this slide, it's kind of a couple simple statements. Number one, what's the best way to send payments? Well, it comes down to these different factors. Where are payments originating? Are they domestic? Are they being originated in different countries, perhaps in Europe or in Asia? That makes a difference on the best way to send payments to the bank. But the other variable, which really is important as well, and sometimes is understated, and I think, Jason, you probably agree with this point as well, is that the number of banks will determine what may be the best strategy. It may determine whether you utilize SWIFT or whether you utilize direct connections alone, never mind the first question in terms of where payments are originating. So the number of banks, the types of payments, and the number of payments, the actual volume of transactions, can make a big difference, especially in the cost of these different connections. So when we're talking about connectivity, you can see this diagram fairly loosely put together, but you get the idea is that you start by initiating payments, some sort of treasury system or payment hub that you'll initiate those through, and those are sent securely to your different banks, both domestic and international. There's a variety of means. Those are a sample with the logos you see in the bottom right, with SWIFT or direct connections or regional protocols like EBIX or Zengin or Answer as an example. All these different ones are different possibilities. But there's a lot of options, and that's where the confusion sets in. This slide may not necessarily do much for the confusion, but I promise we'll get to that point in terms of helping provide some guidance around what's the best type and strategy for connectivity. But you look at this slide, and yes, it's a bit overwhelming, but we're going to go piece to piece through it. Number one, starting from left to right, you have your treasury management system, or you might have your ERP, or you might have other sort of payment portal. But you have your system where you're initiating payments. So if you follow the orange diagrams, for those that are seeing it in good color, you'll appreciate that there's payments being sent, typically on a batch basis, because that's normally how we send payments. But whether it says batch, whether it's I need to send it in real time, the point is the connectivity is the same. You're sending it to this, what we'll call a connectivity hub. Some ability, some solution. It could be embedded within your TMS, which is quite common, or it could be something separate. And there's a host of different ways you could connect to the bank. I put 3 of them here: SWIFT Gateway, host-to-host connections, as well as regional networks. And then if you follow the orange line, then obviously it goes from the connectivity hub, which may provide some additional workflow, such as additional approvals, digital reformat of the file so it meets the exact bank requirements, and it goes on to, let's say, SWIFT as an example, or the host-to-host connections, or the regional network, whichever is most appropriate. So the orange line represents how we initiate payments. The blue lines, going the other direction from right to left, represent the information that we get back, and we obviously need to make sure that both streams of information are part of your connectivity solution. So we want to make sure the payments are sent in a secure manner, they're formatted appropriately to what the banks need to see, and the flip side is we want to make sure we get those acknowledgments, those ACKs and NACKs as we call them, back into the system. If we're using a SWIFT network, then there's multiple levels of acknowledgement. There's actually 4 to 5 levels of acknowledgement. If we're using, in the US, more of a sort of wire and FedWire system, then you're really only going to see 1 or 2 levels of acknowledgement. So the different channels provide some flexibility there. But the one point we want to make in terms of the connectivity is not just to show, yes, there's connectivity, yes, there's automation, because that's going to align with your goals, but it's kind of comes down to what do we actually use, because there's a lot of different choices. If we're connecting with maybe very large banks domestically in the U.S., like Citi or Chase or B of A or Wells, then there's different ways you can connect to them. If we look at large banks in Europe, there's more than one way we can connect to them. And so sometimes it's trying to figure out, well, why would I choose one versus the other? So this table takes those 5 different choices, and I've broken it out in those 5 different ways. In terms of direct connections, like FTP is an example of a direct connection. Regional networks or country-specific networks, so we have EBIX in Germany and in Switzerland and in France. We have Zengin in Japan as an example. There's Editran in Spain. There's different regional networks that are specific to that country. And then we have MT Concentrator, which is basically a service that's provided by a service bureau that actually utilizes the service bureau's BIC or SWIFT membership. Then there's the two bottom solutions, which are direct connections to SWIFT, where you as a corporate have your own SWIFT solution. Alliance Lite 2 and Alliance Access are different versions of that. Effectively, and you can see as you move your eyes to the right of the screen, you'll see these different scenarios and how they play out and when, loosely speaking. I mean, there's obviously, again, that recognition of different variables such as the number of banks, where they're originated, the number of payments, and the different payment types kind of direct you to which of these solutions, and in many cases, the combination of solutions that make sense. There is no concept of one size fits all. Each bank will have its own preference choice based on either what the bank supports, they may not support every one of these options, or based on your profile with that bank. So as an example, if you have maybe accounts at a local bank or maybe a large bank here in the US, you're going to find that an FTP connection, host-to-host, is one option. Concentrator might be another option, as well as sending via SWIFT if you have your own address. But if you have very high payment volumes, so you have a lot of wires, a lot of ACH that are being sent, you may not necessarily want to incur the cost of sending transactions over something like SWIFT if you can have a direct connection that's available to you. So as a result, what we find is we basically need to look at this to determine what is going to be the least cost scenario. There's three variables that we always care about in bank connectivity. Number one, automation. Number two, security. And they may not be in that order. It might be security, then automation, but those are the first two priorities. The third priority is going to be cost. So if all of these offer the same level of automation, they all offer the same level of encryption and security, then the third one is what's going to cost us the least. And in some cases, it's going to be FTP or host-to-host. In some cases, it's going to be using a regional network if we're in a country that supports that, like France or Germany, Switzerland, Japan, Spain, Italy, these sorts of ones. And then in some cases, it's going to be utilizing SWIFT because that makes the most sense based on the composition of payments and types of payments that we're sending. So you can kind of see loosely from left to right. It gives you a bit of description. But overwhelmingly, the big information you want to take away from this is, number one, lowest cost is the best. And you need to evaluate that based on the number of banks, where it's being originated, and the number of payments. There's no point if all of the different options achieve automation and security, you might as well pay less to simplify the cost and lessen the cost in terms or cost to connect to the bank. Jason, I know there's a lot of information there, and I know this is something that's important to you, but is there anything that we're missing in that?
Well, you had spoken to it a little bit earlier about origins, where the payments are originating from. I would also want you to, as you're looking at what sort of connectivity options would be a good fit, I mean, we're going to get to a little bit more into the payment factory side of things, but also you want to think about what systems you're originating payments from, how those different feeds of payments are coming through. It might be that you do just have your Treasury group that's initiating payments. But if you have more complex scenarios where, say, it's coming from an ERP system, an AP system, maybe your HR group has need of payments. They're not going through your AP system, or they're not going through your ERP system. In those cases, you want to look at something that's a little bit more dynamic in terms of what you can input, or you're going to be needing to put in place a payment factory in order to funnel those payments into whichever connection you decide.
No, that's a really good point. And then I segue to what we're going to talk about in a few minutes' time around this concept of payment factories and some of the mechanics of implementing those. So excellent input, and overall, keep in mind those three things: automation, security, and then find the lowest cost of ownership. There's no point paying more for connectivity to achieve the exact same thing than you have to. Now, as we move forward out of connectivity, because we could spend hours in that, but we're not going to, let's talk about something much more exciting in terms of fraud prevention. Now, in fairness, and Jason, you'd agree, it's unfortunate we have to talk about fraud. It would be so much better if this was not an issue anymore, but unfortunately, it is a reality, and the dark storm clouds are just not going away. If you look at AFPs, they did a great survey, as they always do each year, on payments And specifically, a lot of that was dedicated to payment fraud. The ACT in the UK, similar studies, and these stats are telling. I mean, 62% of organizations report, and I stress the report part, have experienced attempted or actual payments fraud. Jason, I think in your experience, probably 62% seems a little bit light. That's the organizations that report. There's probably lots that don't feel comfortable in saying yes in a survey like this.
Yeah, I agree, and it is unfortunate, but these are staggering numbers, and it shows a need for us to make sure that this is a topic of large discussion. We do need to get information out there and knowledge out there about how to prevent these.
Yeah, no, I agree completely. So the stats speak for themselves. There's a lot of organizations that admit that fraud is a bit of a problem and something they're working to improve upon. So whatever the stats are for you, the fact is that fraud, especially when it comes to payments, is an important area. Now, what we have here is a simple diagram. Treasury sending via payment hub to your banks. And I circled two different areas, the initiation as well as the transmission. I'm calling these exposure points. And the reason why I call them exposure points is that they create opportunities for cybercrime. Now, when I say they create opportunities for cybercrime is that cyber criminals, fraudsters, they are looking at how you initiate payments and how you transmit payments to the banks. So exceptions to these rules, the standardized process creates an opportunity. And if you have any exceptions to that, if you do things a little differently in one geography versus another, if you do things differently for a large payment versus another, if, let's say, a payment that is due as part of an acquisition is treated differently because maybe some of the confidentiality than normal large payments, there may be good reasons for making those exceptions, but they create risk. And that's the key thing. There's a reason why if you look at, read about some of these BEC and imposter fraud schemes, I should say, they all focus on these kind of exceptional type payments that may fall out of the typical payment policy that you have in place. So standardization is incredibly important. So let's talk firstly about payment initiation. So when we talk about payment initiation, there's some obvious things here, and I probably don't need to read them, but I will because they're on the slide. Number one, separation of duties. Important, important, important. We all know that. Don't need to explain more why it's important. It just is for simple reasons that you want different people touching a payment. You don't want the opportunity for one person to be able to say, oh, I feel like sending a wire here. Maybe it's by mistake. Maybe it's something that's purposeful, but the fact is we want to basically eliminate that. Simplest way to improve some structure and prevent against potential fraud or bad mistakes. Application of limits is another one, and those are obvious ones, so we do all those. Ensuring the approvals align with those dollar limits, so basically linking the separation of duties and applications together. Pretty standard, pretty important. Pretty much every Treasury system, every bank portal does that. The key part that I'm going to add is on the second point. Standardization. Make sure that no matter what bank, make sure that no matter where the payments originated, no matter what time of day it needs to be approved or how urgent it is, that there's an alignment with your existing payment policy. That's where we're saying standardization, for the simple reason that those exceptions get preyed upon. One example that I've seen, and you've probably seen this too, Jason, a lot of times, is that sometimes the review of attached documentation, so the documentation, the paper trail to support that payment, doesn't always get reviewed. Maybe it's because it wasn't in the same place, wasn't in the same system. Maybe the Treasury system didn't support that. Maybe they were having some sort of actual paper trail, then you're doing stuff in a bank portal, what have you, in terms of why that's the case. The reality is that mandating the review of the attached documentation to ensure that it's an authorized payment and it should be approved is very, very important. So I know that's one example. Jason, you probably, I don't know if you have some others that you want to share.
No, I think that standardizing the approval workflow is extremely important, and you start to see that a workflow is not standardized when you have multiple points of entry, when you have 4 or 5 different bank portals plus a Treasury workstation, and a way to manually key in wires somewhere else. If you start to have all of those different points of entry, you're now needing to keep track and audit all of those different workflows, all of those different approval processes, it becomes very difficult, and that is where a fraudster is able to sneak that extra payment in.
That's a very good point, actually. And in fact, it's sometimes impossible if you're using multiple points of entry just to keep the same way of doing things, the same way of approving, the same way of reviewing the paper trail or documentation, because different systems do different things. Whether it's having multiple Treasury systems in different regions or multiple bank portals, the fact is that no two systems are identical. And in many cases, it makes sense to have one payment hub, one system acting to consolidate everything for that exact reason that you mentioned. You have those, you create a risk opportunity by having multiple different systems involved. So excellent point on that. Now, as we switch from initiation to payment transmission, there's a couple of things here. Sometimes when I've presented this to clients, I've found that this is the part that maybe isn't executed as uniformly as the initiation. Most people understand that payment initiation, you need to do things standardized, you need to have the right limits and approvals. I mean, that's not rocket science. We've heard this before. On this side, given there's a little technology involved, it sometimes is new information to some people on the Treasury side. So number one, payment files to the bank must be encrypted. That's pretty obvious. But that being said, I've seen instances where people have different systems. Maybe they have the ERP handing off to a payment system as an example, or something that's hosted in the cloud by a payment network, where they actually have human-readable files passed between systems. That's a terrible idea for obvious reasons. When I see human-readable, I mean like Excel, CSV. You should never have a file with payment information, like final payment instructions, in human-readable format that could be touched by someone. All of that should be encrypted. Ideally in a format that itself is difficult to read and can't just be opened up in a spreadsheet. But further to that, you want to make sure that it's encrypted as well. So it needs to be not human readable, and it needs to, in fairness, not really be available so that it's really hard to get at, and even if you can get at it, it's encrypted. But I've seen the opposite of that, and I'm sure you have too, Jason, where you kind of give your head a shake to think, oh my goodness, I can't believe I just saw that. That would be so easy to be able to hack.
I have definitely closed my eyes a few times seeing some things, but it doesn't go without being said. Now, a good way to think about it is if you're sending an email to one of your banks asking them a question about one of your accounts, you're not going to type in your full account number into that email. You're going to take a few of those characters, maybe slice it up a little bit, put in some asterisks, just so this way maybe they see the last 2 digits and you say 4. In that case, you're doing a hand-done encryption of that account number. You would want to have the same thing done for any of the files that are being sent around. Those files contain not only your company's account numbers, but your vendor's account numbers, or in the case of a payroll file, your employees' account numbers. That information needs to be encrypted.
Yeah, no, it's an excellent point, and agreed fully. It's not always executed on, but in fairness, Jason, that's kind of why they bring you in sometimes, is to make sure that those loopholes and those possibilities are closed shut. Other points on this, acknowledgements and confirmations, review those. Now that's, in fairness, after the transmission, but it's important part of that communication process. As many levels of acknowledgements as you're able to see, especially when you introduce SwiftNet into the discussion, that network introduces a few more different confirmations and acts, as we call it. Those must be reviewed to ensure that what you transmitted to the bank is what they received, and then nothing else got slipped in. And that's very, very important for obvious reasons. Where it's available, and in the U.S., it's not as available. There's actually not very many banks that fully support this as part of their authentication of payment files, and that's the use of digital signatures. Swift has a format called 3S Key. It's very popular in Europe, and there's a couple banks here domestically that support it, and it will be supported more. There is no doubt about that. At this time, it's a question to ask your bank to see if that's possible. If it is, you should do it, because that effectively is the equivalent of you signing off the payment by hand, except that it's a digital signature that's tied directly to you in a secure way. But it allows you to authenticate that payment file so that the bank looks at that payment file and says, if it's not signed by this person, then it does not get processed. And that's important from a fraud prevention standpoint. The last one, and reviewing payments versus sanction lists. So OFAC is obviously a big one we use in the U.S. The EU and UN lists are the other ones that are very important. It's important to be able to review payments of those. Ideally, it's important to not just wait for the bank to tell you, oh, you matched against something that was on a sanction list, because by the time they let you know, it may be later that day, it may be the next day, it may have been held for a couple days, you don't necessarily know. And that doesn't necessarily, especially in a fraud scenario, may have stopped the payment, but it doesn't mean that you've stopped the issue that created that fraudulent payment in the first place. There may be other things that are tried. Like, okay, that one didn't go through. Let's try a bank account that we know may not actually run afoul of the sanction lists. So it's important to get as early notification as possible that there's a match or a hit on the sanction lists. And as an example of that, I put a very loosely put together diagram here, but it really is helpful to ensure that you utilize all these tools so that you can get as much notice as quickly as possible so you can start making lists or making the appropriate action to ensure this doesn't happen again. So you can kind of see some of the bullet points. There's other benefits to integrating sanction list and watch list screening into your payments workflow. For example, even with, let's say, legitimate payments that aren't fraudulent but happen to match basically maybe to a country that's on OFAC as an example. They might be proper payments, but the bank's going to hold them and wait for further documentation. The earlier notice you get of that, the better. If you send it and you know immediately, oh, this is going to run across OFAC, it's legitimate, you have all the documentation to support that, you may want to be able to do that proactively instead of having to wait for the bank to tell you, oh, wait a second, we held this payment for the last 3 days, so we didn't tell you about it till now. That's a legitimate scenario. It happens a lot of times, and that's where the value of these screen features are, in addition to the fact that it can help alert you to suspect payments so that you can understand who initiated that suspect payment, where did it come from, was it really one of our employees, was it something from outside that we don't know anything about, was it a supplier instruction that was maybe changed at the last minute. All of these sort of things need to be investigated, and the sooner you know about that, the sooner you're able to figure out what went wrong in the first place. Now, the last part about fraud and fraud detection, we talked briefly about this before, was the idea of acknowledgments and confirmations. So there are multiple levels of acknowledgement depending on the payment connectivity channel you're using. If you are using, as I said, SwiftNet as an example, has up to 4 different levels of acknowledgement in addition to the CAMT 054 message. If you're getting ISO 20022 XML messaging, then you'll actually get that credit debit notification in addition to actual 4 levels of acknowledgement throughout the payment workflow. So there's a lot more transparency with Swift, in fairness, compared to maybe what we see with more direct connections to banks. But whatever acknowledgments that you're getting, the things you want to be able to do is look at them and monitor each stage of the workflow. To do that, and this isn't a product presentation, but I had to take screenshots of something, so I added a couple from our system. But you get the idea that this sort of information, you would want that integrated into a dashboard for the simple reason that it allows you to immediately look at and see and not have to go search for, but actually have it provided to you the status of that particular payment. What's the last acknowledgement that we received on this? And is that exactly what we're expecting, or is there something, maybe it's held somewhere, maybe it wasn't received, maybe there's an issue with this that doesn't align with the payments that we sent. For example, I'm receiving acknowledgement for a payment that I never sent, at least I didn't think I sent. These are the sorts of things that reviewing these levels of acknowledgement really, really helps with. I can't stress enough, and I know, Jason, you think the same way, that you need to immediately be able to understand, here's what was sent versus here's what I thought I sent, and understand any variations as quickly as you possibly can.
And just to add, the banks do tend to, I know that it feels like a little bit of a battle trying to get that extra information out of the bank, but banks do tend to provide good information if they do reject a payment. They'll say it'll be adequate. It'll point you in the direction that you need to go, and a lot of times it'll just be maybe you incorrectly entered somebody's name, and that's what flagged as an OFAC, put it onto an OFAC list. Simply just going through and re-reviewing that information. But a lot of times these payments, when you're reviewing them, they are urgent payments. You do need to get them out. From my practitioner days, I remember what it's like when you send a payment now and you're just waiting for that acknowledgement to come back in. You're going to need to stay on top of that. So it is important to make sure that you have that information flowing into a single point, and it's very easily displayed to know when action on your part is needed.
Yeah, no, that's a fine point, and just reiterates the point well. You need to stay on top. You need to understand, and obviously having that information integrated into your payment dashboard just makes life a little bit easier. So that kind of concludes the fraud part. Hopefully those are some tips and tricks that are helpful. But that being said, to continue the helpful advice, Jason, I want to turn over to you to talk a little bit about, well, centralization of payments and specifically payment factories.
Thank you. So we had spoken a good amount now about how you can really increase your security levels for fraud prevention. Sorry about that. And part of that is streamlining workflows. Now, all of these different points are fully capable when you implement a payment factory. Another point that we have up here is duplication of flows. If you're initiating payments in your ERP system and you're sending them directly to the banks, and then you also have payments that are going directly to the bank through your Treasury workstation or through a banking portal, there could be requests that come to you that have already been input within an ERP system. There's no way to check to make sure, well, you may be able to go in and find that out by researching in the ERP system, but oftentimes if somebody's coming to you, it is an urgent payment. So you'll probably input that payment. It'll go through a separate approval process, not the same person reviewing it. In that case, you have fraud. Now, by going through a single point of contact to the banks, you're now able to say, well, we have one single source for all of our payment files. Everything needs to be input through here. You're able to verify that you don't have any duplicate payments, and you're able to verify that you are going through this one single workflow process. Now, another point here that's displayed in this diagram is you have connections that are being made with your ERP system to your bank, as well as connections from the Treasury to your bank. Now, as Bob had stated earlier, one of your goals may be to reduce costs. Maintaining an individual connection, it has a cost that comes with it. So if you're connecting through FTP to any of your various ERP systems, say to one single bank, then you may also have your payroll systems connecting directly to those banks. And then your Treasury portal with payment access for the users, and then you have maybe you have a cash system that's receiving bank files. All of those are different connections to the banks. By consolidating into a payment factory, you, the Treasury, who typically manage those banking relationships, you'll also be managing those banking connections. There'll be one single connection. Those payments will go through your ERP, will go through your Treasury workstation from your ERP system. So you are looking to consolidate those. And that's what we have displayed here. You have your, another source of payments is deal settlements. As I mentioned earlier, Bob was mentioning payment origins. Payment origins coming from various locations, coming from different jurisdictions. I like to look at the operational side of payments. Where are payments coming from in terms of a need? Do you have one group within your finance department having a need for a certain type of payment, maybe as we have here for deal settlements, or maybe something Treasury related, or maybe just simple expense wires that need to be sent out? All of those are different origination points, in my opinion. They get entered into different systems typically, and they get processed through separate workflows. But that may be just for business needs. Then at another point, they can go through a Treasury system, this payments hub within your TMS. That'll allow them to be consolidated into maybe a single batch to reduce costs, or maybe it'll be increasing fraud prevention. Either way, what you're gaining is you're gaining a streamlined workflow, you're gaining visibility into those payments, you're managing that connection to the bank into one single pipeline. Now, some of the other things that you're going to be gaining as you're centralizing payments within your ERP system is that you'll be able to you'll be able to start seeing a cash forecast. Now, it's a big thing, cash forecasting. A lot of my clients that come to me, they say, well, we don't have a cash forecasting program. We're not sure where to start. Starting with a payment factory, you're able to see then all of your payments that are going out affecting your liquidity. Now, it may be that you're just sending payments out that day of, but you could be sending those payments out through this payment hub in your TMS system, your cash system, and seeing that information from the liquidity needs in the payments module going into that cash module for you. And how will those payments now affect your liquidity? I tend to see a lot of my clients really enjoy being able to know if they need to make an investment or redemption even earlier on, rather than waiting for the AP group to come in and say that they need more funding in their AP account. So you're able to increase your visibility there.
Yeah, I think that's a great point, Jason. I mean, obviously there is, we'll say, political alignment that's also part of the equation. I mean, it does make obvious sense. You put your payments together, you have some efficiencies, and whether it's the payment hub is within a TMS or not is not the most important point. It's the fact that you centralize these payments together to gain those efficiencies, increase the visibility. And to your point, from a Treasury perspective, I don't know how many organizations don't exactly know what's being sent from AP or other systems directly to the bank, and they only get wind of it when they see their intraday reporting. And that's obviously not good enough when you need to optimize cash, when you need to leave your bank balances as idle as, or not as idle, but eliminate the idle balances and really put your cash to work. All of those things kind of work against the fact that you have multiple systems and multiple parts of the business that are touching the banks. You kind of want to centralize that for all those different reasons.
Yeah, thank you. Yeah, that's a very good point. Now that's the goal. That would maybe be a case if you have a goal of visibility for your cash. But if you have a goal of, if one of your goals isn't visibility for all of these payments, maybe you already have a different way of being able to know your liquidity needs. You may want to go through a case of blind routing. Blind routing may be where you're managing this connection of payment files that are going from your ERP system or any other origination point, and rather than going in and having additional approvals on wire payments or batch payments that have already been approved by their respective teams, you're sending them out to the bank. You're still saving costs by having a single connection to these banks, but you don't need to have all of this additional AP information in your cash system. You'll know the cash needs. Maybe they provide you with a roundabout number, and that's what you use to complete your cash cycle for the day. You're still, maybe you want to have an approval on that total file. You may be able to do that within your Treasury workstation as well. All of these are essentially just different forms of a payment factory. You have your payments that go into this system, into your Treasury workstation, and it gets processed through any sort of means, and it gets sent out to the bank. That's really the way that that we look at a payment factory today. And we also have listed up here as dynamic routing. This is what we were speaking about earlier, where if you were to bring in a set of payments, maybe your AP payments, and you want to approve them individually, you could do that here. Or maybe you have payments that are coming in from a dealing system or a trading platform that are fed into your workstation. Those then may get approved by Treasury. Maybe this is a part of the approval process, or your Treasury workstation may add a certain level of security enhancements to it. We have up here digital signatures. The 3S key signatures might be added during the Treasury workstation approval process.
Yeah, I think it's an interesting point, Jason. I used to see many more instances of blind routing where the ERP and IT that was managing the ERP took much more ownership of making sure that all the workflow was done in ERP, and then all the formatting of files was done in ERP. So if it was EDI as an example, or Notcha format, or more lately things like XML and Swift formats, that was all done in the ERP. But more recently, that extra work, especially moving to more XML standards like XML Paint, ISO 22 formats. That's added some complexity, especially as different banks have different variants of these formats, and IT is starting to really throw up their hands and say, look, we don't want to be in this business of trying to figure out which bank needs which format, and more particularly, which bank needs which format for each region, because some banks need different versions of XML formats, no matter, even if it's the same bank, it's, you know, for Romania, for Bulgaria, for Brazil, for China, they all need different variants and different information. So as a result, a lot of organizations are starting to look at, we need to centralize this. We need someone that actually understands payment formats to deal with it. We're just going to spit out one format from the ERP, regardless of payment, regardless of where it's originated, and we're going to let the payment hub or TMS or what system that's going to be doing this for us do the rest of the heavy lifting and take care of sending it to the bank. The fact there's also the opportunity for additional approvals, especially for very large amounts, and the application of digital signatures to further authenticate the message is also very good. But the main thing that IT is looking at is saying, look, we just can't keep tweaking SAP or PeopleSoft or NetSuite or whatever we're using to continually keep up with all these different changes in formats. And every time we're in a different country, it's a new format variation. We just don't want to deal with it anymore.
No, that's an extremely good point. The knowledge of the different jurisdictions and jurisdiction requirements is something that is innately within the Treasury group. The Treasury group is really on the frontier of whatever the business needs are. As you break into a new market, you're going to be processing new vendor payments there. You're going to be needing to get cash into these new markets that your company is expanding into. And in that case, you're already in contact with local officials in the area, either establishing companies or establishing accounts. So you're starting to get a feel for what the legal requirements are, and thus the banking requirements. So in that case, it does make sense for a Treasury group to be managing the paying out of the ERP system, coming out of an ERP system and going into a Treasury managed system. So
probably a nice segue into the next topic in terms of actually creating the structure for payment factories, isn't it?
Exactly, it is. Now, as you start to move towards your payment factory, you're going to be consolidating all of your processes. Now, consolidating a process is a start towards what a lot of companies have deemed as one of their goals, and that's to create an in-house banking structure. Now, an in-house banking structure is a goal that requires a lot of other teams to be involved. It does have a lot of different mechanisms that support it. But one of the functions of an in-house bank may be for a POBO structure, pay on behalf of structure, where you have a single company or a single group that's making payments on behalf of other organizations and other entities within your corporation. Now, the first step towards that is being able to have a handle on where these payments are coming from, either different companies within your group, different systems, but also then being able to handle where they're going to. Now, this is not something that's, I have to say, I haven't seen it done manually, and I can't see it being done manually with any sort of efficiency. It is something that requires the mechanics of automation for being within a system. As you have payments or payment requests that come in from other companies, being able to route those and send them out through a single source of cash or a single FinCo or financial company that's being the basis of the in-house bank requires a technology solution. But being able to start with a payment factory is the first step towards it. First, you go from a decentralized process and decentralized organization. Then you bring in the processing of the payments into a single stream, into a single workflow, and then you can take that next step of that legal step of bringing all of those payments now through a single organization. Now you're starting towards in-house banking, where you're going to create a company that soon holds the cash and then uses that cash to send out those payments. Now, what does that do for your company? Why is this turning into something that's a very desirable structure? Is because it will decrease the cost of payments. You'll be able to expand your companies, so you have the scalability, you have lower cost payment processing, You're also able to be a little bit more flexible with payments. You're not creating, as Bob had mentioned earlier, you're not trying to keep up with your North American ERP system versus your Asia Pacific ERP system and trying to make changes. It's scalable. So when you implement a new payment format for a new market, it's going to be used across all of the different companies that are in-house bank participants. So you do also have some options for different types of payments within an in-house bank. Some of those payments might just be international wires. Those are the simplest payments. Typically, you just require a little bit of banking information, and you're able to get those payments out the door. Locally routed payments would want to include SEPA in this one. So a lot of you are familiar with SEPA. They're less expensive payments. You can batch them. They do require some local jurisdiction requirements in order to get them out the door. These are the ones that really hinder your scalability. As you break into a new market, you are going to need the ability to put in place a local payment. Next, when you have an in-house bank, as you start to move towards this FinCo structure, this consolidated structure, maybe you're able to use intercompany payments. You'll have to track them. You'll need to have, it requires a lot more advanced structures, but this will allow you to also save on your cost of capital, cost of keeping the cash within different companies, or having to settle in cash within your organization just because it's between two different companies. Now the other one is a little bit more new. It's the non-bank payments. So this could be something more blockchain payments, or if you're able to use different types of PayPal or peer-to-peer software in order to process those payments.
It's probably a good segue to talking about some of these emerging technologies, and there's a lot of them. I mean, if you think about how many different press releases there are on blockchain and distributed ledger technology, and you're thinking, okay, how does this really affect us? Is this really going to happen? That's a whole different presentation. But in terms of speaking to payments specifically, if we look at what is blockchain, it's a technology, right? It underlies Bitcoin, but it's not tied directly to Bitcoin in the sense that you can have blockchains or distributed ledgers that have nothing to do with Bitcoin as a virtual currency. Because in fairness, in Treasury, Bitcoin is effectively, even if it's a virtual currency by definition, it's effectively a commodity. There's a limited supply, and it does not have the liquidity that would ever be useful for corporate Treasury applications on the mass scale. It's just not. There's some retailers that will accept it in lieu of maybe more fiat currencies like USD or euros, but the fact is that they're not holding it. They're not in the business of wanting to make money off that virtual currency. They're just translating it into the local currency that's appropriate for that particular business unit. But for payments, it has some interesting options, and so that's why it's worthy of mention in this presentation. So by definition, it's a technology. It's a distributed ledger, and so sometimes blockchain is called distributed ledger technology because that's technically what it really is, but blockchain is an easier word to say. This distributed ledger of transactions, you get where the terminology comes from. There's blocks in the chain, which are actually the records. So the network by default actually provides simultaneous update and refresh to all the different participants in that particular blockchain network. So it's very different than anything we've run into, and even just getting your head wrapped around that part may be a bit tough because you're thinking, okay, I'm not totally sure what are blocks, what are chains, who are participants. But if you imagine that, as an example, all of your different banks that you work with today, instead of being part of their own little networks in each country or being part of SWIFT, let's just say that they were all part of a blockchain. And as a result, any time a payment was made from, say, Standard Chartered to HSBC, then all of the participants, all those different banks, would simultaneously be updated that a payment had occurred. Now, they won't see all the information, all the things they don't need to care about in terms of the payment doesn't affect them, but all of the different participants that have these blocks in the chain, they all see everything happening at the same time, so there's no dispute that a transaction actually occurred. So from a Treasury standpoint, there's a couple of different applications, and some are beyond our discussion today, but the idea is that for payments, trade finance, and confirmations, then identity management is another one, there's a lot of different potential uses that are being considered and talked about in the space today. If we talk just about payments, because again, trade finance and trade settlements and stuff is a little bit different than we want to go into today, distributed ledger technology, the opportunity that's been discussed, and you've probably, for those of you that have read about it or just happened to click on a link just to understand what is this that my CFO is asking me about, do we have a blockchain strategy, I don't know. This is the kind of thing that's been asked about. Distributed ledger technology, so blockchain, potentially bypasses the existing banking network that we utilize today. That's the potential opportunity. I stress potential because it's still a lot of time and a lot of effort and a lot of things have to happen before it manifests itself. But the idea is that it would potentially be used to initiate peer-to-peer payments. That's and maybe even bypass banks directly. So the example I gave before was all the banks were participants. Well, let's just say that you and all of your suppliers that you initiate payments to, you're part of a blockchain. So it's a little blockchain for ABC company and you have all your suppliers part of it. You would potentially, with the right technology of course, utilizing blockchain, you would potentially have the ability to pay them directly without having to use a bank. That's the theory that fintech or financial technology providers are grasping on in terms of we can do things a lot differently. So that model, the PayPal kind of model where yes, you may ultimately translate what's sent via PayPal into a bank account. The fact is that actual transaction is happening peer-to-peer and not happening with the help of a bank or a banking network or a network like SWIFT that's part of that discussion. So that's the idea behind this. It's a little bit future, so I don't want to spend a lot of time on this in the presentation, but just enough to give everyone an idea of when we're talking about blockchain, we're talking about potentially the idea of bypassing that traditional banking network. Now, there's a lot of issues, and then you can see at the bottom of the slide, trust and counterparty risk are by far the biggest ones. Because if you think about it, right now you send payments through your banks, and if something goes wrong, say you sent it, you received confirmation, but does your supplier, whomever you're paying, just didn't get the funds. Who do you go to? You go to your bank, and you know they're going to fix it because they're very big, they have a contract with you. You're just not worried about that. It may be a difficulty, you may do a lot of yelling and screaming, but the fact is that you know it's going to get taken care of in the end, or you will never do business with that bank again. In this kind of scenario, where potentially you're going peer-to-peer, who are you going to chase down if there's a problem? Where does the support happen? How do you know that this firm, maybe it's a technology firm that built it or some enterprising startup company that is the next big thing in peer-to-peer payments, how do you know that they can actually make good with a $10 or $100 million payment as an example? You may not necessarily have that trust. You may be taking on more counterparty risk because it's not a bank that's being part of that. That is some of the issues. Those are the issues that really need to be solved for, and there will be solutions. I'm very confident that this will be something that in coming years, and I stress years, not year or 2 years, but multiple years, but there will be solutions for those things, and once there are, then this may well be a viable opportunity. In the meantime, what you find is there's a lot of press about actual banks. There's a whole consortium called R3, which has, I think it's 50-odd and counting large global banks, all the names that you know, banks that all of you on the phone do business with, that are trying to figure out themselves, how can we develop blockchain applications given the services that we provide to our existing customers. Now, in many cases, they want to leverage these kind of distributed ledgers within their own technology stack. That means that it may underlie an application used with the bank already today. Perhaps the payments that you remit, maybe they'll use blockchain instead of using other networks that they might have to communicate with banks. Maybe they will utilize it instead of their own multitude of network and file servers and all sorts of things that they use to communicate just within the bank itself. So that's one part of it, which may make banks a bit more efficient and maybe lower cost in providing their services. That is one of the negatives, potentially, is that if banks take all the advantages for themselves, then maybe blockchain is something that never sees the light of day in terms of being available to a corporate treasurer to be able to utilize for their own application. It might just be something that's kind of selfishly taken by the banks, if you will. So there's some argument and counter-argument. It's too early to make any sort of assertions in terms of exactly what will happen. But the point is that the technology is evolving, and this is one of those technologies that will make a difference, whether it'll be embedded within applications we use today, whether it'll be a blockchain app that you could use to send payments. That still needs to be sorted out because of those issues, but there's some interesting discussion to be had. And certainly, as you see press releases and you see banks claiming to do this or fintech companies claiming to do that, obviously you can pay attention to the words when you see things like will do or plan to or going to. Those are all very future-based statements, which means that they haven't done it yet. They just theorized and maybe wrote up a nice little proposal to say, hey, we should all do this, and then they need to figure out a way to get it done. So probably most experts in this space probably say 3, 4, 5 years. I kind of tend towards the latter of that. I think 4 to 5 years is when you're going to start to see some sort of penetration here. For now, it's something that we can kind of sit back and enjoy how it's going to play out, but not have to worry too much about it. So I know it's a bit of a sidetrack in our conversation, but there's many people that ask, what is blockchain? What does it do? Are you using it in the software side? All these sorts of things. Hopefully those slides help to sort it out a little bit. So to quickly summarize, and I'll ask Jason for his commentary on this one too, especially the first part. Jason, you did a great job of identifying why you should really make sure you're pointed in the right direction before you start figuring out how to fix things.
Yeah, you definitely need to have objectives of what your payment strategy is going to be for your organization, evaluate the shape of your organization, and where you can move it towards a more efficient state. Is efficiency actually even one of your goals, or is it really just visibility? So those are really the questions that you need to ask yourself as you start to identify your goals.
Yep, that's excellent, and I cannot agree with that one more. We talked then about bank connectivity. We talked about the possibility of centralizing that, where some of the advantages in centralization would be. And we also talked about cybercrime, unfortunately. We talked about cybercrime because it's one that we would prefer not to have to talk about, as we mentioned. But there's definitely advantages to centralizing and standardizing. In fact, you hear this word centralizing in everything that we talked about today for the simple reason that there's a lot of value in centralizing visibility and control. It helps in fraud and cybercrime. It'll improve your connectivity. It'll give you better visibility. All those sorts of things are reasons that you want to centralize as much as possible. It doesn't mean that you don't have different units or different people in the field. It doesn't mean that you don't have different entities initiating payments potentially, but centralizing visibility and centralizing control will create the efficiency as well as the prevention of potential fraud and cybercrime that we're all looking to do. Last part, and Jason spent really good time on this, making sure that payments. Yeah, you did a great job.
Yeah, I wanted to lead in from the fact that you said centralized. In order to really add scalability for global payments, centralizing is key. You need to be able to have everything going through that single source to really have the facility of scale. If you're trying to break out into 5 or 10 new markets over the next year, and you have 5 or 10 different systems that are processing payments, you're going to need to update those 5 or 10 systems. Or if you're in a centralized function, you only need to update that one system for those new markets.
Yeah, no, that's a fine point, and I like that as a great way to summarize and finish the presentation. So with that, feel free, of course, to ask any questions. We don't have a lot of time here to answer them, but we certainly can answer them all offline. You can reach us directly or certainly use the chat monitor on the right side of your screen. But Jason, I definitely appreciate your time today. There's definitely further information that we could all benefit from. You can reach us at Kyriba, you can reach Actualize directly, and there's some further reading on Kyriba's website that may be interested if you feel like, wow, I just need to learn more about this. There's so much I don't know already. Jason enlightened me in so many different ways around the possibilities for payments. Definitely there's more that you can read, and we'll be doing future webinars on the topic as well.